Alrighty, tradies. It's the start of the week, man. It is definitely Monday for us. All right, traders. Welcome to the AAA session. My name is Gary Fichardt, Director of Trading here at Market Traders. Glad to have everyone here, and very excited about what we're going to go ahead and talk about this week. Of course, it is the outlook for the week. We're going to talk about currency pairs, specifically euro and pound. We think that the euro and pound are absolutely setting up. We've had last week euro weakness, euro strength, pound weakness. It was jumping back and forth. Looks like we may have the same sort of ride this week. We looked at the fundamentals. Not a bunch of fundamentals out this week. We've got some euro data coming out on Friday. Other than that, it's going to be a quiet week of fundamentals. So we're definitely going to go ahead and focusing more on the technicals today. And I have my two guests, which is Tyson and Chris. And we're going to go ahead and take a look at some trade opportunities with them right now. So let me go ahead and jump into the panel. And it is Chris. Chris, good day. How you doing, buddy?
Hey, Gary. Hey, everybody. Good afternoon. Nice to be with everyone. Happy Monday. Busy week ahead. Lots to talk about today, so happy to be here.
Fantastic. Good stuff. So, Tyson, how's things going in the stock market this week so far?
It's going good. A little crazy. We got a lot to talk about today. A lot of earnings last week didn't give us a whole lot of the fireworks I was expecting, but I'm expecting a lot of movement. We've got the JIC Jet I want to talk about today. I mentioned that last week. Kind of explain what that means, and then also some of the things that we've got to pay attention to. That some of the ancillary markets are telling us that we need to that risks that are on the horizon potentially.
Okay. All right. Well, let's go ahead and dig into that while I go ahead and tidy myself up. It looks like I've got a button that's just gone loose on me here. But let's go ahead and talk about that right now and jump into the details. We'll go ahead and talk a little bit about stocks, what you're anticipating this week, and then I want to definitely jump into some technical analysis on some the euro and pound crosses. So
Yeah,
jump in.
so I mentioned something a few weeks ago, how I said that I believe it's one of those economies and one of those stock markets where you have to kind of hedge yourself. And I said the trade that's working well is to buy technology and sell everything else, do kind of what's called a pairs trade. Um, and I think that that's actually going to continue to happen. So the way that I can look at the market right now is I'm very confident we're going to get movement between now and the election. That's the one thing I can say for certain. The market's going to move. Is the market going to continue to rally up and make new highs, or is the market going to fall back down and maybe retrace half of the move from March lows to now? I don't know. I honestly don't know. Technically speaking, I think we're getting extremely overextended. Logically speaking, fundamentally speaking, we're getting crazy overextended. But the way to play it is, in my mind, is in the options market. What you could do is you could buy calls in the Qs, in the QQQs, out to November, and you could buy puts in the S&P 500 in the SPY. And what that does is that gives you kind of a customized straddle. So essentially, if the market moves, we're looking for a 8 to 10% move, if not more, either upside or downside within the next, by the time through the election. So these would expire mid-November or so. So you get all the election impact. But I'm actually looking for probably about a 15% swing between now and the election, whether it's 15% upside or 15% downside. I don't know. The way to do it is to buy calls in technology stocks and buy puts and everything else. But the other thing that I wanted to talk about is, and then I'll get to the JIC Jed thing. The one thing I wanted to talk about that not a lot of people are talking about is there's what happens at the end of each year. A lot of times in a normal year, we get what's called tax loss harvesting. And tax loss harvesting is essentially fund managers selling losers a lot of times to lock in those losses, to bring down their net gains, and essentially lower their overall tax burden. I think the opposite could happen, and this is something we have to pay attention to. The opposite could happen this year. Biden is starting to surge in the polls, and not to get political here, but polls can be obviously completely wrong, like they were in 2016 for both Brexit and for the election. But what's interesting is the betting markets are now starting to reflect a pretty aggressive Biden lead. Now, that is going to be very interesting in the stock market because no matter how you crunch it, I don't see that could be bullish on risk assets or bullish on stocks when we're talking about an economy that's potentially going to slow an economy and higher tax rates. That's obvious, guys. Again, not to get political here, but taxes are going to go up under a Democratic leadership. So if that happens, I believe that we're going to see the kind of the opposite of tax loss harvesting. We're going to see selling winners to lock in 2020 capital gains rates rather than paying a 2021 Biden capital gains rate, which could be completely higher. So we need to pay attention. If Biden continues to surge or lead in the polls, I believe that these hedge fund managers are going to start selling their best winners, their Amazons, their Facebooks, their Microsofts, the best stocks out there, because they want to pay this year's tax rates rather than potentially in 2021's tax rates, something we need to pay attention to. Now, to cap this all off, the stock market all off, and then I'll tell you my 3 favorite stocks in the market right now. But I talked about what's called JIC-JED last week, and it's something that I need to pay attention to, and it's something that's the only way that I believe I'll start believing in this economy, in this market. And it's really the foundation of how the market moves and how stocks are priced, should be priced, and are priced long term. And that's jobs, that's income, it's consumption, growth,
Right.
earnings, and dividends. And right now we're in an economy that has horrific jobs, as bad as the Great Depression. We have incomes that are, well, I mean, people are making more money by not working. That's not a good thing. Consumption is, again, it's growing, but it's coming off of the depths of hell type of levels. So consumption's not really high on anything, not back to normal levels. Growth is non-existent. Earnings are horrific, horrible, and dividends are being cut all over the place. And then on top of all of that, buybacks are now being almost, they're kind of a non-existent thing too, because companies are preserving capital. So again, we're in this an economy, in an environment where the markets are going up, but we've got horrible jobs, horrible incomes, horrible consumption, horrible growth, almost no earnings, and dividends are being cut, plus buybacks are going away.
So what are you saying? Is it doom and gloom?
This is not different. Like I said a month ago, this isn't different. It feels different. Oh man, everything looks amazing. Unfortunately, Gary and Chris, there's going to be a whole lot of novice boneheads that get dramatically injured in this market when things start to go back into normal environments where we actually price stocks on things that matter. That JIC-JED. There's a lot of people out there buying these momentum, high-flying stocks on massive margin, and it's going to hurt a lot of people. So just be very careful, guys. Do not try to go all in with these stocks. Understand that this time is not different. Oh, it might feel different. Maybe Trader, what's that guy? Dave Portnoy. I like that guy. Trader Dave. I like that guy. I actually think he's kind of a cool dude. He doesn't know what he's doing. So again, pay attention to people who actually know what they're doing and who have been through this stuff before. There are 3 stocks I like to cap all this off. The only 3 stocks I like right now is First Horizon, FHN. Love that stock. Great value. It's not going anywhere. It's gotten even cheaper. I really like that. TAP Coors. I played this a couple times off right around this level. Rode it up to about 38 to 40. TAP. Great stock right now. Again, these are stocks that I'd be willing to hold long term. And then the last one that I really like right now is I actually do. This is kind of a play on if the economy turns around, right? If economy turns around, I think that driving is going to increase and car purchases are going to increase. And so I don't know which ones are going to be a winner. Is Tesla going to win? Is Ford going to win? Who's going to win? Maybe Tesla is going to take over the world. But what I do know is all of these cars we're still not at the day of the DeLorean and flying cars. And so I know that all these cars need tires, and Goodyear Tire GT is a great play on whoever wins. I think that we're at least 5, 10, 15, 20 years away from flying cars. So they're all going to need tires on their cars, and GT Goodyear Tires is the way to play that. So those are my stocks.
All right. Fantastic. Well, it sounds like doom and gloom, but there's some light at the end of the tunnel.
It's not doom and gloom though. This is what I think traders and investors need to hear. I think that the media has made it so that it's just like we can't lose. We shouldn't bet against the Fed. We shouldn't bet against President Trump. It's like we're being led to believe that things are different this time around. It's like this is what always happens. We're always led to believe like everybody should be going this way. It's like, look, don't fight the Fed. I get it right now. Don't fight the Fed. But Tyson, dude, that options play, on the QQQ and the SPY is amazing. Like that's a perfect way to kind of hedge this scenario, because right now I was just finished my weekly outlook today. It's like I don't know what the catalyst is going to be to start driving things back to normal, but it's like, the next 2 weeks would be a big one. We'll talk about earnings ahead in the election, but like right now with coronavirus and K through 12 and colleges starting school possibly in 2 to 4 weeks, we also have unemployment benefits that are done at the end of the month. And so unless Congress puts something together with another emergency package, I mean, we're going to have higher unemployment once again. We're going to start to see those real numbers. So finally, the mystery's been revealed to you, the JICJED. But to finally have the numbers behind it to see, like, people are now, and maybe there's more stringency on the, like, I don't expect to get a stimulus check. I don't expect to get some bailout. It's like, unless you're actually unemployed.
Even if you do, that plays into my thesis of higher taxes in 2021,
right.
Therefore having to sell my winners so I pay this year's taxes, because we have to pay those bills eventually. Right? We're going to have to pay for this eventually, and that's going to come in 2021, 2022. So, yeah, you're right. And the straddle play, the customized straddle play, Chris, it's the guess of like, I don't know, we're going to go up or down. Doesn't matter. I just need the market to move.
Exactly.
Yeah.
And that's what I mean. We've been talking about this, especially through July, is we know there's going to be more movement than this. I think that, if traders came into 2020 fresh and came into 2020 new, what an amazing learning curve to like see the highs and lows over the market, what it can do, what it's capable of doing, and then to see what we're dealing with right now, which is like, man, this is really boring. If you came into the market this year, like in July, you're thinking like, man, this is boring. What do I do? But like, if you buckle up for the next 6 months or 5 months, like, you will see that this market will unleash just a wave of volatility that we are probably going to be surprised with, like we had back in March. The more we start creeping into this like eerily tight, eerily slow movers now, I just think it's going to feel like March all over again. I don't really have a planned direction. It's like, I know we can sit here today and talk about technicals, which end up winning. But March, those technicals went out the window. Like, we had levels that I never thought would be broken or, respected, and they were just completely obliterated. So that was a learning. I mean, even for us, like, that's a learning curve. It's like, there's a ways that we need to adjust moving into something that we know is going to be high volatility this year.
Yep. Absolutely.
Yeah, I must disagree with you in that sense, Chris. I think that March was just a reset of the market. It's a lot of the technical analysis are still holding pretty firm, and all that is just what the market was demanding for a while, and it took that time to go ahead and move it to those levels again. And since March, things have quieted down.
But you say reset, but look at how it reset. It reset in the most violent way possible. I mean, you can't tell me that traders that were prepared with decent equity management were prepared for that type of. I mean, I get it. I get it's a reset. It's a cleansing, but you don't see that happen without like a ton of effort behind the scenes from institutional money. Like, that's
sure.
way beyond our pay grade and way beyond our access level. But it's like, we have to figure out how to navigate those waters and survive that. So,
and reset means that it got out of whack at least one time before that too. So right now we're in and out of whack kind of territory where we're going to go back into the reset. So the technicals may actually start to matter again, but it's like, we're just kind of trading within ranges. It's just kind of going, it seems like it's trying to go someplace, but going nowhere. But I agree with both of you. The technicals are going to win the day when it's all said and done, just like this is not a different environment, but it can take a while before those technicals that logical technical move actually happens. Aussie dollar is the perfect example of that. I'm convinced of where the logical technical move is going to be next. The bigger technical move is going to be next. It's just, when is that move going to happen?
Well, let's take a look at the chart, right? The chart's going to speak the language that we'll all understand, right? And that is what the market's doing at those levels, right? If you take a look, and I'm just going to use one example, we can go to a few more other examples. But if I look over here at the pound New Zealand dollar, we had a big little upward move on the pound New Zealand dollar. But what was it doing? It was testing the top side of a channel, upside channel. Overall, we've got this thing setting up in a huge downward move, but it did go back up and test the top of the channel. It failed a few times. We also see it range bound right here. It tested the top of the range and went back into the range. But this is all and maybe we're speaking different languages here or different approaches here. But in my opinion, this was an expected move. As price hits resistance, we're expecting price to move back down south again. Which one did you speak about? Aussie pound, Aussie US dollar, right? Is that the one you speak about,
Aussie
Tyson?
dollar, my arch nemesis right now.
All right.
Aussie dollar. I mean, pound dollar looks really good as well.
Well, look at Aussie dollar. Look at Aussie dollar. Aussie dollar's been in this channel right here. Here's the top of the channel. Here's the market testing the support again, and then that support becomes support again for the market right here. So although it went violently back down south right here, it did come back to retest the channel and now starting to work its way back up again. So there definitely is, as a technical trader, there is some sort of like heads up or some indication that price is moving in. And I get it. I get this whole thing. If you haven't got proper equity management in and you don't trade it properly, you're going to get eaten up. Especially for those traders that trade with hope. You know those traders, right? They get in and they hope it's going to go up without any sort of technical support behind it. So there's definitely going to be levels where the market's going to go ahead and test. And sometimes I agree with Chris. There's a fundamental intentional move that's going to push the markets a lot quicker to these levels. But we can definitely, as long as we say, and I think Chris uses the same term a lot, be on the right side of the trend. And so anyone that's on the wrong side of the trend is going to feel the wrath of the market, call it that, if we have to get off spiritual on this side. But you're going to see that price is going to do what it's going to do because it's supported by technical analysis.
Yeah,
and then added
fundamentals. The technicals provide the map of where I'm going, right? I'm taking a trip to Florida. I'm doing I'm going to drive my car. There's my destination, and here's the route that I believe we're going to go on. The fundamentals are going to provide the fuel. Now, sometimes we get, fuel that's a little watered down. Sometimes we get rocket fuel. But you're right, 100%. I think we're kind of saying the same thing, where the technicals ultimately, they matter. Sure. We know that. Sure. But we have to be in environments like this, especially with a lot of events. We think they're going to have massive impacts, but sometimes they're smaller impacts, and the impact doesn't come until a little bit later. And so we have to be nimble enough. We've been talking about this a lot in these sessions too. We have to be nimble enough to change with what the market's given us, but then also patient enough to stay on what is currently working. So it's a game, and that leads me to doing the plug here. You gotta get a dang mentor. You gotta be in one of our trading rooms, because we're doing every day. We're trying to stay in front of the markets. We're trying to figure out what's going on. And honestly, guys, pat on our backs. I've never met a team that's better on trying to stay in front of the markets and doing a really good job of trading what is working right now than us. So great job.
And I think the message is don't be married to a trade, because if it's gonna go against you and it's supported by fundamentals, then you are in for a longer ride than you possibly want. So don't be married to a trade. Make quick decisions to make change of direction. If there's a change of direction, make a quick decision to get out, take your profits or take your loss, whatever it is, and then look to turn the trade in the opposite direction. So let's go ahead and jump into. I think we got some great point of conversation here. Let's jump into a couple of things here on the pound and the euro crosses for this week. And I'm going to go ahead and open up just a chart right here so we can go ahead and speak about the chart so that everyone understands what we're seeing is what's happening in the market right now and how we can explain it and walk ourselves through this process. So let's go through right here. This is the pound Canadian. Pound Canadian came to you can see it's range bound here, at least in the midterm. We've got some range bound trading right here. It's come off the top of the chart. We're looking for price to move back down to the support down here around about 158.71. We can see that we got an inside channel and price is testing the top right here. So even though we've seen some rally in pound, it doesn't necessarily, in my opinion, feel like it's going to go any further. It feels like this is just more or less just a small sort of recovery on the pound, but then eventually going ahead and falling back down south. What is really interesting, guys, and I'm going to add this and I'm going to get your opinion on this as well, but I did a session on targets this week, and you can see right here, this week we see a lot of the pound targets have been hit already for the week. And what does that tell you? That tells you that the market's either looking for change of direction or the markets are actually sideways. And that's when you have a lot of hit targets early in the week. So pound looks like we got either sideways or is looking to change direction. But then I look at the euro, and the euros are all looking for sell opportunity, which means it's looking for overbought conditions to go ahead and sell, which means that we may actually be in that downward move already on the euros and looking for some support on those. But let's go to this one right here. So what do you guys think about the pound CAD? Give me your views on the pound CAD.
So I have a question on this, and I'm going to throw a little bit of a curveball, but I think we're going to be on the same page on this. Before I talk about the pound CAD, what is your opinion on the pound Aussie?
Okay, pound Aussie. Let's pull that one up.
I like the sell on the pound CAD, but
is this going to tie back into the Aussie CAD for you, Tyson?
Exactly. That's exactly what it's going to do.
I knew it. Hey, look, I'm long pound Aussie. I'm short Aussie CAD. And let's see here. We were just talking about the pound CAD. I've been on the same rhetoric for pound CAD for the last month or so. If it's below 7,200, I'm still a seller. I think we can get down to 6,800 again, 6,600. But the pair just doesn't move the way I'd like it to move. I mean, Gary's got a really clean chart on that showing, decent tops around 72. Sell it there. But it has protected support levels at 68. There's a nice swing low at 66. But if we break above 7,200, I think there's open space to travel back up to 76. Now, whether that's on the firmness of the pound or possibly weaker oil, I'm not sure yet. But I'm going to stay out of the pound CAD, and I'm going to put my attentions into what I said. I'm long pound Aussie this week, again at lows, and I'm short Aussie CAD for just a humble retracement. Like the daily swing, the weekly swing Aussie CAD, technically we should be able to easily come back to 9,100 on that or 9,000 on the Aussie CAD.
Yeah.
So quick one, yeah.
That's what I was thinking. I like the pound CAD short for sure, but I also like the pound Aussie long. So that leads me to say, well, I need to focus most of my attention on the Aussie CAD short.
Well, I'm going to throw this out there, Chris and Tyson. If are we expecting U.S. oil to rally and break that $42 a barrel level? I'm not necessarily mean today or this week, but are we going to break out of $42 a barrel and break to the upside in U.S. oil?
I think if the airline, we're looking at probably one of the major headlines right now is like if airline and travel and things are cutting back once again, or reclosures are heightening with coronavirus cases, I feel like oil is going to be, I don't think we're going to see, single digits again like we saw earlier. I think that was just a really awful speculation, slide just to crush everybody. But look, it's come back since. And so, again, it's amazing how extreme we saw this widening volatility and then this shriveling volatility to now. Oil hasn't even we've been in $38 to $40 for the last month and a half. Yep. Clearly it's going to go somewhere else. And so, technically I say, hey, if it breaks above on a daily or weekly candle, if it breaks above $42, I would give oil the room to drift higher. Do I think it should? Not necessarily. Tyson mentioned Tesla earlier. Are they going to take over the world? It's like, look, at the end of the day, I think Tesla is a company that wants to make batteries, not cars.
Correct.
So it's like if Ford, GM, all the other big manufacturers, Toyota gets on the bandwagon making electric cars, I think Tesla's going to be the battery company, not the car company. But what Tesla's doing is like completely disrupting the pricing of, they make way less cars, they make no profit, and yet they're worth 20 times more what the others are market cap wise. It's like it's insane what Tesla has done, considering how everyone wanted to short them last year. And you got a CEO that's trying to saying like, oh, it's too high, but hey man, it's now obviously it's one of the many stories. So
bringing you back to U.S. oil.
I'll go
oil,
to oil. Yeah, real quick on oil for me. I think oil is tough, and I'm going to go back to what Chris said. It's the CAD pairs for me, and I said this last week. They're a little difficult to analyze, a little difficult to trade right now because I actually think that oil's fairly priced, and there's an argument to be made that it could be underpriced because we've had such a destruction in supply coming onto the market on a daily basis with OPEC, with all these cuts. And I know that there was just a huge glut of demand or of supply sitting already on the market, but we've worked through a lot of that, even through this shutdown, because of the cuts in production. So I think it's pretty fairly priced. So I think we could see $5-10 higher. I think we could see $5-10 lower. And for that, it's kind of one of those what happens, where does it go? So I would, if you're going to trade the CAD pairs, I would focus more on the relating currency rather than the CAD itself. So I would focus on, I am more bearish on the Aussie, so therefore selling the Aussie versus the CAD is the way to go. I'm more bullish on the pound. So maybe if I look at what you're showing me, I would probably avoid the pound CAD because, you know, I don't know if I'm not convinced oil's going to rally. I'm not convinced it's going to sell off. So for me, it's almost like, I don't know. I'd kind of step to the side, if that makes sense.
Okay. No, that makes absolute sense, and that's what I was trying to get from you. Because if you're going to think that if you're going to think oil right now is going to be a big price mover for the Canadian dollar. All right. If we get to higher prices in oil, we're going to get some added support for the Canadian. Obviously, jobs reports and all that other good stuff, housing and all that. Those numbers, rate decision, that counts as a big factor as well for the Canadian dollar movement. But at the moment right now, I'm looking at oil prices, and if oil is going to hover around below 40, then I'm going to look at the other currency pair, like for instance right now the pound, and say I'm going to be supporting the pound with it, buying or selling the pound, and then not worry about the Canadian at all. So I'm looking at this from a technical perspective. I'm saying if the technicals are telling me that pound should be selling off, then that might be a good a midterm or a medium-term trade, because if US oil does go ahead and break above 40, then that'll push the pound CAD further down south, which then supports the trade going south. So me, I would go ahead and start slowly adding into the pound CAD and selling pound CAD, looking for that 158 level to come into play. If it breaks up a little higher, I haven't invested too much into it to make decisions whether I'm going to add on to that trade, because I'm still believing price is going to move back down south. But I'll keep my eye on US oil. If it breaks 40, I'm definitely going to be adding more positions in and looking for pound CAD to drop back south.
I'm going to throw another curveball at you here because this is interesting. The CAD correlation, or I'm sorry, the pound correlation to oil historically is very, very high until after Brexit. Brexit threw a wrench in that and just made a tidal wave. So what I'm wondering, though, Gary, is are we now further enough away from some of the things that happened in Brexit where the pound is now starting to show its historical correlation to oil? So therefore, if oil rallies up, the pound could continue to get a bid. That's the other thing we need to pay attention to, is that oil had a 20-plus year correlation to the pound until Brexit. So that's another thing that we have to pay attention to when it comes to the pound and the CAD with tying it back to oil.
And we don't have Brexit done yet, right? We've got still until the end of the year for them to deal and sort out exactly how the exit's going to take place. But we've still got that could create a sort of influence on the directional bias for the pound as well as we head towards the end of the year.
So what I'm hearing is the CAD. So what I like is the pound is going to be very fundamentally driven, whereas the CAD is going to be very technically driven. And so it's kind of combining those because the CAD is still going to and always most likely going to be very correlated to oil, whereas the pound is also historically, but it's been thrown off because of Brexit. So it's more fundamentally driven. So I like the trade, Gary. I think that, again, if I look at my current positioning, I like the pound CAD short, but I like the pound Aussie long. And so I would love your opinions on the Aussie CAD short. That's what I would love.
Well, before I get to Aussie CAD, I like to see the pound CAD. I'm with the Tyson and as well Chris on this one, looking for a long on pound Aussie. In fact, I've already got some positions in right here, and I'm looking to add on to this. But I'm just waiting for price to break a little higher and stay above that. I think I've got it at 180.56 right here. Yeah, there it is, 180.56. Above that level, I will look to buy, but not getting too overly invested on this one, because I still need to get above the channel line right here. If I do get above the channel line, then yeah, I'm with Chris and Tyson on this one on a pound Aussie buy. But I am already starting to invest in it.
Yep, this one I think is going to give us. I don't think you have to be real quick to jump in. I think once it starts to clear some of those higher levels, it's got plenty of room on the upside to go. And I think that you can be patient on it. Yes, we all want to get in early, but if you wait for some confirmations on break some of those channels on the upside, I think that we've got plenty of clear space to the upside.
Yeah, and just look at that big swing too. I mean, Gary, you got this big. Is that a daily or weekly chart? You got a big daily chart swing. I mean, and you just look at even a conservative retracement level. Like, I mean, we could look at that chart and want to get in, right now. It's like we've played this the last couple of weeks in my trading room. We bought it low, we took some profit, we bought it again, looking to take some profit. I'm back in for 2 positions right now, trying to take it up to a really conservative profit level. I know there's way more to the upside than probably what I'll take. You know, if I get from truthfully for me, if I get to 81.80 to 8,200, I'm positioned well enough at 7,900 to 7,950. That's plenty of profit for me to take for a couple of these big trades.
Sure.
But I know that there's room to 85, 86. We could go much higher than what I'm looking at. But again, I like to also, with some of my positionings, I'm building positions off of what I think are the best probabilities, the safest levels to get back to, and I can always re-enter. I can always let my robots pick up some extra trades for me, as those breakout levels will be pretty nice. So if we see daily candles closing above finally a higher high, the pound Aussie is one of those currency pairs where when it closes, it definitely has room to run.
Yeah,
absolutely. I like another pair as well. Let's jump to pound Swiss. I love pound Swiss. I'm actually buying in. I've bought quite a bit in on pound Swiss, and I'm holding on. I've been holding on to this for about a couple of weeks now, actually maybe 3 weeks, and I keep seeing it making good profits, then come back. Good profits come back. So I'm actually getting very cautious on this one right here to see if we do start testing the highs. If we hesitate at the highs again, maybe it's time to go ahead and cash out. Something similar to what I'm seeing in Brexit. Not Brexit, sorry, Bitcoin. As it's range bound and it rallies up to 9,000. I know we spoke about that last week. But as it goes to 9,000, I'm looking to, which I have cashed out. At 9,300, I cashed out. Looking for it to drop back down. Even if it drops down to 7,500, 8,000. Buy back in again and start slowly building your positions again until it gets to 9,000 again. But this is the same thing on the pound Swiss right here. Pound Swiss dropping. Now it's got a nice little rally today. Could this rally just be short term like we had last week? Last week we had a big rally in pounds at the beginning of the week. It didn't sustain itself, and we saw some dips again. So is it going to be another week like this where we have rallies, dips, rallies, dips? We'll have to wait and see. But I like the pound Swiss as well as a good buy. And we're all the way down here at the support right here. I mean, it's very, very supported right here at this level. You can see a nice. What I like the most about this, Chris and Tyson, is that the fact that it's rallied up, tested resistance, then came back down, tested the support again, and now staying above that level, looking for the market to rally up. So we've got a nice little rebound test of this level, which is about 1,500 pips away. So I like this. If it really breaks out, I said to the guys in the trading room, if we get to 22, I'm buying lunch for my buddies at the golf course. But if it gets up to 133, I'm cashing in and retiring, and that's it. You won't see me for the rest of the next 2 years. That's how much I've got invested in this pair.
Nice.
But now, Dyson, on your question here, before I get to the Aussie CAD chart, you asked me a question. What do I think about Aussie CAD chart, right?
Yes. Yes.
Okay.
And
so
the
I
main
said,
reason, again, just is because to tie it all back, we all like the pound Aussie long.
yes.
The pound CAD short technically makes sense. I like it. It's just one of those that I'm kind of hesitant on. But if I was going to make a decision, I like the short side on the pound CAD. So if I'm going to combine those two, I'm going long the pound and short the pound. Net neutral on the pound leaves me with the Aussie CAD short.
Aussie CAD short is exactly my play right there. I've been short Aussie CAD now for a while. I'm staying short of Aussie CAD purely because we're not breaking above 40. But I see weakness that's driving that pair or that currency pair. I see weakness in the Aussie that I'm really, really trying to push towards and see if we can continue to see some weakness in the Aussie. It's been screaming big time for the last couple of weeks, short Aussie. And I'm still short Aussie. And so that means Aussie CAD I'm short. And if I do get a rally above 40 on US oil, it's just going to escalate that dip to the downside. Let's go take a look at the chart, see what the technical say.
I think all three of us like that trade.
Yeah.
I mean, I'm in it. I'm in Aussie CAD short. I'm looking at it, like I said, conservatively, I love 9,100. I have, let me see, I think I have like 5 or 6 entries in an Aussie CAD because I've got some sell stop levels that I'm looking to add to it. But I'm just trying to get back towards 91. Just a nice simple level. If you put a swing on like the daily or weekly chart, those are easy fib levels. So nothing crazy on the big swing. And and honestly, of that currency pair, we've talked about this before. That's a currency pair that I can let do a lot of things. I'll give that currency quite a bit of wiggle room and find a way to work back towards targets, towards pockets, supply and demand levels. It just tends to be a really well balanced, technically friendly currency pair. So for those of us that are looking for some rational thought and rational technicals, this is one that doesn't really get out of whack too often. So when it does, it tends to balance really nicely.
Yep, I agree.
Yep. If I take a look at the daily right here on the chart, you can see that you've got this downward channel, and automatically you start thinking, okay, price should be moving back up, and it's true. In the midterm, we could see a rally moving back up, but in the short term is the play that I'm looking at right now. I don't know about you guys, but in the short term, the play for me is bearish, and it's going to come back to support, maybe get another rally, and then push back down. Because if I go ahead now, pop this open to a weekly, you see a different picture. Now you see this range that has been in for months, in fact years, and you can see that there's the top of the range, there's the bottom of the range. We've just come off the top. When I say just, that was like in 2010, so 10 years ago. But the market's moving back down to the support level down here. And so all of these opportunities right here, even though I'm seeing a short-term dip, and that price could do something like this. It could dip down like this, hit support, go back up, test the backside of the channel line, and then sell off, and just
Where's
do
that target? Where's that target, Gary? Where's there on the downside? Because I think that you're 100% right on that. If you go back to the daily, I'm looking for a sell-off. I don't necessarily think the sell-off is going to be massive on this move. I think it has a sell-off. It's going to test some support. It's going to bounce up to that longer-term downtrend. And then that's when the big move is going to happen, probably into next year. But on your first and second downside target there, where are you looking at?
Look at 91.60. And I'm putting 91.60 right here is because I've got two setups right here. I've got the fourth wave because we've completed the fifth wave move. So I'm looking at the fourth wave, which is 90.12. But because of the support that you're seeing here, you see the support coming off this range?
Yep.
So there's a range that it's stuck in right here. And we've traded back into the range. So this was a false break right here, traded back into the range. So I'm going to say 91.58. If I get to 91.58, I'm happy to go ahead and take my profit and run for the yields. I might leave some left on the trade if I see a break through that. See if I can get to the fourth wave at 90.10. But I'm not looking for a long-term downside move. I'm just looking for a short-term dip to these levels right here, because I believe that price is going to move back up to come retest the top of the channel and the maybe consolidation highs up here. But then at that point, I think we're going to be in for a big nice fall, because if you go to the weekly, you'll see a nice little big bearish move to the downside that is expected.
Yeah, I think we all have a very similar target, and that target down there creates just a brilliant looking right shoulder of the head and shoulders pattern also.
Yeah. But look at the weekly. It definitely gives you a different picture right here. On the weekly, I would be holding on to some sell for a long period of time. If I was looking at a long-term trade right now, I'd just be adding positions in here on the Aussie CAD, selling it down towards 76 and change.
Yep.
So
with that being said, I'm going to wrap this back to some of your guys' bread and butters and babies here. I love Turning Point on the Aussie CAD right now because of where it's sitting and how high it's sitting. This is a perfect place to start deploying a strategy like Turning Point, or even targets, trying to trade back to some of those missed targets that we've had on the weekly and daily basis. What are you guys' thoughts on turning something like Right Trader or Momentum Max or something like that on to the downside to some of those targets?
I just taught a Pockets Right Trader Max class last week, and I went through all 28 currency pairs, and this was one that I think we have a really strong directional conviction, but I don't have the right behavior that I'd like to see on something like, Right Trader Max is great, but I also want to see it be a currency pair that likes to show trend behavior. And the Aussie CAD with the lower volatility that we have right now, the kind of tight ranges that we're seeing, where you could get a move down for 50 pips and then it's going to retrace 45 of them. That's a really tough system to say, like, hey, let's trend trade this, because the trend is so choppy. So I like the system that's going to be sell bias, but be willing to kind of hang on to the position and lightly scale into it and then get the bigger move. So I'm about accumulating some positions to short. I do like the pocket strategy, where it's like I could be selling these levels and have the pockets below around 9,100 or 9,000. I can change the price levels, like Gary said, 9,160. I think we're all kind of seeing the same levels between 9,160 to 9,000. That's a really safe level for us to be exiting for profit. And I agree. I think that we probably do find a way to go back up towards 94, 95. But then, just the way I like this currency pair so much, it's how do we get there? If we go down, let's say we go to 9,100, and then we just quickly run to like 95, 96. Well, that's great to quickly make some bullish trades, but if it's inefficiently running to 95, 96, I'll short it. And I'll short it from 96 to 1.00, and I'll take it all the way back down to those inefficiency levels. So there are definitely a lot of plays we can have, in the medium term on Aussie CAD. But back to your question, Tyson, momentum breakout max, I could hide all the noise with the sentiment strength line. I really could. So that'd be a good one I would consider. Right trader max, I'm gonna set that one aside because I just think the conditions are not great for that type of trend. It's just such a choppy trend right now.
What if you went down to a 1 minute or even 5 minute? Could you catch some of those micro trends on writing something like that?
Definitely can.
Absolutely.
Gary does it all the time. Yeah. Gary does it all the time.
I mean, take a look here, guys. This is the right trader max right here. Now, just as Tyson's point earlier on about trend trade systems, right? Turning point, all these other targets that could chase off the targets to downside, right trader max, all that type of good stuff. If you look over here, right trader max is telling us right now on the 1 hour time frame to stay out of the market because it's still bullish. So it's not telling us to go ahead and sell yet. If I go to a larger time frame to be more conservative, it's way, way, way to the upside. So there's no turning point yet. So if you want to go down and pick up the top, if you want to try and pick the tops, go to a 15-minute time frame, go down to a 1 minute if you want to do intraday, and a 5 minute if you want to do intraday trading, and you will find trading opportunities. You can get in and out of those short-term trades.
And this is what you talk about when you talk about in some of the videos you do, gearing up, gearing down, correct?
Yeah, absolutely. Yeah. This is a typical example of a gear down trading approach where you take a system and you work it down to a lower time frame and use different type of parameters, but on a lower time frame, the same sort of logic of the strategy, but just gear it down to a lower time frame. And the same thing goes right here. If I had to go ahead and take a look at if I'm looking for trend-based systems, and I've got end zone trader open over here as well with the moon phases put on the chart. The Ichimoku card is a very good trend. I think Chris? Yeah, Chris, you mentioned something about having a nice, good trending system, right? And looking for some sort of trend base. The Ichimoku card on its own, just that indicator alone, is a great tool to use to help traders to understand when the market's actually in an uptrend or downtrend. Right now, it's telling us stay out of the market if you want to sell. So the 4 hours says it's still above. So if you're a conservative trader, stay out of the market on any sells right now for Aussie CAD. But I can tell you this much: when it starts breaking through this cloud, it's going to be time to start turning it on. I mean, you could turn on all trend trading systems and say, "Hey, let's go," because this thing is going to head south. So. And I mean,
so what I like about this is that right now isn't necessarily the best time to start turning on a trend trading system. Something like Turning Point isn't necessarily a trend trading. What it's trying to do is trying to catch the next trend, right? It does saying, okay, so I want to try to catch the next trend. So turning something like Turning Point on early on, and then once we start to get the move, going into something like Momentum Max or Right Trader, something like that to really maximize that move, I think is the way to go.
Absolutely. Check out the targets here. Target is almost similar to the Turning Point where you add in positions in and maybe even pockets as well. You add in positions to fill a pocket, right? And so as you look over here, look at all these targets down here. These unhit targets on the monthlies. You've got a monthly unhit target right here. You've got a monthly unhit target. So, and here's a monthly unhit target. So there's a lot of missed targets to the downside that price is going to go ahead and start chasing after. And so when we start breaking the trend, it's absolutely going to be big, and that's why I'm building up my trades. My stop loss in the Aussie CAD right now is above the turning point of the daily. So if you look at the daily time frame right here, I'm right at the top of this right here. I'm right at the top right here, and waiting for price to move back down. So there is going to be. Let me just go ahead and turn this out to the daily so you can see a little bit more what's going on here. So I'm looking at this right here, and I want to show you something I think that I haven't mentioned. But take a look right here. Look at Aussie CAD divergence. Yeah, so on your point, Tyson, going down to a gear down approach like a 5 minute, 1 minute time frame and picking up some short-term opportunities, the data is already confirming that we should be seeing price moving to the downside. So I'm expecting a breakout to the south side. So heads up, guys. Some short-term trading opportunities may come around this week for traders to go ahead and take advantage of, especially Aussie CAD.
Well, I love that we're all on the same page on this page.
Yeah.
Yeah, right. and just to add to it, I didn't realize that we had 3 targets in a row on that Aussie CAD, so that just made it even more
more attractive.
I'm salivating over that pair right now. Yeah,
I can just hit Chris right now.
I just put in 10 more entries.
So Gary, I've got a question to kind of wrap this back. let's say I know that we're not giving advice here. I know my answer to this, but if I had to choose between the pound CAD short or the Aussie CAD short, which one should I be focused on? Which one are you focusing on to give you the best bang for the buck?
I like bread and butter trades on the Aussie CAD, and I like to go ahead and put some positions on the Aussie on the pound CAD. So start loading in on the pound CAD. So start getting yourself into the pound CAD, but really using the Aussie CAD for your bread and butter trades.
So you're looking
have to
for
have bread
a
and butter
quicker
trades.
move, a quicker move in the Aussie CAD, whereas the pound CAD could take a little bit longer, and you kind of position it.
Yeah.
Excellent.
And then if you want to also look at some sort of fundamentals. Now I know that this week there's no fundamentals laid out there, but technicals may just rule this week. So if technicals are going to rule this week, then maybe that those divergence and short-term trading opportunities may even be the move for this week, while we're trying to filter out some sort of fundamentals. Now let me take a look at next week. I think we may have some data coming out next week for the Aussies. Nope, we actually have US rate decision coming out next week. So next week, Wednesday, we've got US rate decision just before we close off the week. So no Aussie data and no Canadian data. So again, keep your eye on on US oil. Absolutely keep your eye on US oil. But we're absolutely looking for a weakness out of Aussie. Yep. Now I remember, I recall I haven't done any sort of research on that lately. But do you guys recall about a month or so back that the Aussies are looking to look for try and move away from China and move to other countries to export to other countries?
I heard something about that. And for that, I would say good luck. I mean, what other country is going to build vacant cities for 2 decades long to have iron ore exports be as high as they have been? So I mean, I don't know what to say with that.
Yeah.
I think it sounds more like an optic story than it does a real story. I think that Australia has definitely benefited from China's consumption, and they will continue to do so. So I think it might sound good in theory to say like, oh, we're considering moving away, but it's like that'd be like saying that the U.S. is going to all of a sudden start making things instead of buying things.
I'm going to say more research needs to be done on that, because there was something out there in the news about a month ago that filtered out that created some weakness in the odds, but it never really took off. And I know it's still out there. I just want to figure out what that could do to the Aussie, because if they're going to start looking at changes, and they may take a little bit of losses, because they said they may take losses, but it's a different way of approaching in the next 5 years based on their decision on exporting. So I don't know. The relationship may be broken.
The Aussie's going to get hurt pretty bad because I mean that's such a massive exporter of those building products and things that are needed. That has been such a boon to the Australian economy over the course of the last decade plus. So it'll be very interesting. And it's one of those scenarios that actually now that we're talking about it, I remember hearing a little bit about it, but we do need to pay more attention to it, because where there's smoke, there's fire. And that could be a really, really big deal with the Aussie currency pair long term.
Yep, absolutely.
Yep.
And
all right, guys.
I was going to say another thing that can just go again to kind of create these extremes that we've seen in the Aussie, from brush fires to COVID to now, the most correlated currency pair with risk appetite. It's just the whole year. It's like the Aussie has been gone too far too fast for like every set of conditions that we've seen. So that'd be interesting to see it do it all over again. Wouldn't surprise us.
Yeah, absolutely. And because I'm seeing these big moves, or expecting these big moves in Aussie, there's something brewing. I just can't figure out where it's coming from. So we'll have to wait and see what happens, man.
I call it the turkey trade, Gary. It's the kings fattening up the turkey to take them to slaughter.
There we go. All we got to do is make sure we're on the right side of the trend. All right, guys.
Not the turkeys.
Tyson, Chris, thank you very much for your time. Appreciate you guys. I know that everyone else in the room here do appreciate. Hey, listen here, guys. If you haven't subscribed to this channel yet, please go ahead and do that. If you haven't liked this video, go ahead and smash the like button right now. And if you want to place any comments inside the comment area, please go ahead and do that. We do go ahead and review that and answer every comment that is there. And I think that's it. Chris, any final words?
No, I think it's going to be a good week for us. I mean, it's kind of, the home stretch of July. I'm getting ready for a lot of things to roll out for me in August. I know I've talked about this with my Momentum Breakout students. Momentum Breakout Max for me is getting ready to go full tilt in August. I'm ready to, trade with an open mind and an open an open wallet where it's like I'm going to be trading really small, really conservative. I know we're going to have a lot of volatility. I think it's one thing that we can all agree on for this session, and we talked about this the last several weeks, is we know something's going to move the market. Something big is coming, whether it's, fast, whether it's slow. It's like the markets are going to do something to surprise us yet again before the end of the year. And as we get out of summer trading, and I mean, this month we could stir things up with when schools are supposed to be starting in mid-August to late August. That's going to be a whole interesting dynamic with COVID stuff. But it's like, traders, please, as Tyson has said many times, like, this is a public service announcement. If you listen to us, if you pay attention, we will help you. Like, we're all making sure that we are keeping our eyes on the prize. We're staying in current market conditions, and we're going to pivot and change and be nimble as much as needed because we want to be profitable. So for traders that are out there just kind of stuck in their ways or stuck in one system or not sure what to do, make sure you're following us. Make sure that you just benefit from how we are changing when we need to. It's not about being right for us. It's about making sure that we're profitable.
Yep. Absolutely. Tyson?
Yeah, it hasn't changed. I'm watching Orlando, Florida. I'm watching Disney. I'm watching how their opening and reopening goes. JIC-JED, if you don't know what JIC-JED is, go back to minute 3 or 4 and I explain what that is. This time isn't different, but like Chris said, we're doing the best we can. And I think we're doing the best of anybody that I know on staying in front of what the market's doing. There's we might like personally, I'm going to miss some upside. The market continues to be in this oxymoronic type of environment. I'm willing to miss some upside to preserve some capital because I know I'm going to get an opportunity to buy the assets that I want to buy at the levels that I want to buy them at. So it's about preserving. It's about being frugal and being disciplined. So continue to follow us, ask questions, and we'll talk to you guys next week.
Absolutely. And I'm going to leave you with this, guys. Next week, you got to tune in next week. Next week, we're going to be talking about what trading strategy is going to be our most favorable strategy that we're going to be using inside the trading rooms and how we're going to use it in our trading going into the next couple of months. So I know trading conditions have changed. Ranges have tightened up a little bit. There are obviously breakdowns expected, but we're going to have conversation around systems that we're going to gravitate to in the next couple of months as we're heading into these periods. So check out the video, or at least the session coming out next week, Monday. Don't miss out on that. And with me and the team, we want to go ahead and thank you for the time today, and we'll see you next week. This is Epic Big Dog and the team saying cheerio.